I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone riding, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened last week in the financial markets and a look forward at what might happen in the next week, and some great stuff always right in the middle. Well, this week, it was a quiet week early on as markets were waiting for the FOMC meeting, and then, as usual, as the meeting came to a close and the announcement came out, there were some big moves in the markets. We had the FOMC change their tone to a little bit more hawkish, and what that did was, it got a lot of buying coming into the dollar market. When that happens, of course, money moves to the markets where it can earn the most. So any sense that the interest rates were going to go up here, money moved to the US dollar. That broke gold in a big way. Gold was trying to get an upside move going, and pretty soon went into some heavy selling that's basically lasted since Wednesday. So we've seen gold under a lot of pressure. Interesting, gold is down today on Friday as the dollar has also given some of that back and moved to the downside. That even shows you some bigger relative weakness in the gold market. So gold, silver, bonds, they all moved down on that news this week. I had expected gold to get into an intermediate declining phase through the end of the year, and it sure looks like we have entered into that. Bond weakness that came, not exactly something that I expected, as I thought bonds would be a little bit stronger as the stock market went into a correction, which we haven't seen at all. The stock market actually has been very reluctant to even have any kind of a downtick, as after some big upside moves in the last couple days, it's just basically chopped its way sideways. Oil popped pretty good on inventory numbers, but now has stalled, just chopping sideways also. And stocks big up and down moves during the week based on a lot of earnings reports that have been coming out, and we're going to take a peek at some of those bigger moves in the market in just a moment. Let's take a look now at our chart of the S&P 500, our 60-minute chart, and take a look at what did influence the markets this week as we did get these moves. Let's take a look now at that chart. So we have this 60-minute chart that we look at, and that is 24-hour chart, which shows you the gray areas, which is the overnight trading, and the white area is the regular daytime trading here in the United States. So you can see a lot of trading does go on overnight. Monday, Tuesday, world markets were just nearly mixed through both of those days. What happened basically in both days is that U.S. stocks kind of edged lower and then bounced back a number of times. Here we saw that on Monday as the market could not make any ground in either direction. Apple was lower on talks of iPhone sales missing, but then on their earnings we found out, it wasn't quite as bad as what was expected. Now on Tuesday, overnight markets, you see they were softer there also. Basically overnight markets, that's the S&P future, and the overnight European markets, they were just narrowly mixed. U.S. index futures were down early, but you can see in here, as has happened pretty consistently, buyers then came in and pushed the market up. Consumer confidence was much lower than estimated, and that's this bar right over here that got that break to the downside. Drug sector was really strong on earnings that day, as the major drugs all had good upside moves, and manufacturing and airlines were weak on their earnings report. So it was a two-sided market there on Tuesday. Wednesday came, the Eurozone, well, that edged higher. China, though, was down 1.7%. Traders, as usual, were starting to buy on Wednesday ahead of the FOMC announcement. So you can see on Wednesday, we got the futures edging up, and then early in the day, during the day, you had that big pop in there. Look what happened on the FOMC announcement. Well, they went straight down and then came straight back up through the end of the day. What a day that was, with wide swing in the S&P 500, some 30 points of moves there in just a matter of an hour and a half. So big day in there. The traders, as they bought ahead of the announcement, they sold on the FOMC hawkish statement and basically said that December rate hike is on the table. Bulls also liked the fact during the day that there was a budget deal, and that was considered to be stimulative, so we had a big move in there. Defense stocks were up on that budget deal. That were helping. Gold stocks, well, they continued to move down on that news, or started to move down and then continued throughout the week. Gold did try to get a pop early in the day, and it had a really big failure that day right there. Oil stocks, oil soars 5% on the news of inventories not rising as much as expected. And of course, when oil's up 5%, the airlines, well, they fall. NASDAQ was weaker on even though Apple was up on its earnings on Wednesday. So big move in here that came on this news right there, and that was all about the FOMC. So on Thursday, not a lot really going on overnight. Overnight markets were narrowly mixed again. U.S. stocks were choppy in a narrow session. Gold and silver, they had those big drops, and they continued weak. Gold was weak pretty much most of the day and ended down well over $20. So that was a bad day for gold on Thursday. Now, here are stocks. They just continued to chop their way higher, though. As you could see, these E-mini S&Ps right there, reflective of a day that wouldn't give up much ground. Now, we had a day that was kind of a reversal day overnight on Friday, as we had a rally in here trying overnight, but then there was a reversal, and you see that. Stocks in Europe were slightly lower. China was flat, and they have ended their one-child law. Now, that, of course, that's been in place for some 35 years as they have tried to stop their population growth. Now they can have two children there. There are abortions, 13 million a year on average abortions, because they didn't want to grow their population, but now they think that they need to do that to grow their economy. So now they are allowed to have two kids. So amazing, 13 million abortions there. U.S. here, of course, population much smaller, but about 1 million abortions a year, a little bit more than that. So world markets now, they're having their best month in 4 years, as this October has been somewhat not like the classic Octobers that we have seen to the downside. Today, the Chicago PMI does come out strong, and I think we're getting to where good news is bad news because of the Fed. So you see this dip right here in the market on Friday morning. That was as the Chicago PMI came out with that news. Some big movers today on earnings, as you could see. LinkedIn, Expedia, Baidu, Deckers, all up big on earnings, and Solar City down 20%, while First Solar is up 10% in these massive moves on some of these stocks on their earnings report. So big moves that you can see there. So what we're going to do now is let's take a look at some of these stocks that have had these monstrous moves in here. And let's say that, some of these were in line with our patterns, and some of these, well, not so much. But I would say the majority of them just pretty amazing on how they lined up with some of our chart work, and I'm going to show you that right now. So for the best of the week this week, LinkedIn, we're going to give that credit for the best of the week. This pattern is different than we expected. We actually expected LinkedIn to have one more dip. It's been one of my favorite companies. Really have loved their model, and they went into a very big correction in LinkedIn, and we saw this stock fall, very, very significantly as the great model apparently had the stock running too far for investors too fast, as the stock made a move, and I'm going to show you my cycle pattern in here, all the way from 136 to 276 that was last year. Now what you're looking at here is my cycle charts, and believe it or not, this makes sense, and I'll make a little sense of it to you. First of all, there's a big pattern in here, and you could see that here as it rallies and sells off. You could see those cycle patterns right in there, and then what happens is it rallies and sells off. So those are those two big cycles, rallies and sells off. So we expected a little bit more decline in here. Well, didn't do that. Look at this move on the upside in here, as Friday's earnings were just fantastic. We now, because of this move, are only really looking at these smaller patterns that are very consistent. You see these smaller ones right in here, and follow how they look as they go up and down. You can see the perfect cyclical timing right in there, up and down and up, and yep, we're looking for a correction right in here. But then after that, again, it gets into a favorable period. So, if I were an investor, this is a stock that I absolutely love. For traders, probably going to get some kind of a pullback there in LinkedIn, and then move again to the upside strongly into next year. So, gotta love that stock, LinkedIn. Really great pattern that we're looking at there now. Baidu, BIDU, Friday, this was a big jumper in earnings also. They're up 15% on the week in Baidu, and here's the pattern in here. Now this is interesting because first resistance comes in right there. You could see where it's trading as it has this big up week. Cycle patterns in here are really pretty also. See these cycle brackets, those are that help us with the timing on cycles. And then you could see this cyclical movement right in here, and this bad cycle right there, right? And then this has been a rising cycle up to resistance, so we're looking for it to turn over in there. You see that as the next cycle then gets into this corrective phase to the downside. Big day there in Baidu, and let's take a look at this daily chart. I've got it set to 2 years, so we're going to come in a lot, and you could see how it's moved up through this 89-day moving average. So we're going to kind of expect some pullback in here down to that area of the 89-day moving average. That's the slim ribbon in there, which turned positive right over here, and we'll look for that correction to about 163 in there just for the short term. You could see the 89-day moving average here, here, and here were problems, but now it's gotten up enough through it to believe that it will only come down and test it. So that is a look at Baidu on the weekly chart. Other stock in that group is Alibaba, and that one has done very well also. We're in this bounce in the Chinese market, and Alibaba up on earnings for the week about 13%. Interesting in the solar stocks, First Solar up 12%. On First Solar and SunPower, two of the stocks in the solar category that make good money. My favorite, Canadian Solar, CSIQ, it's been hit with the China market, and that one may be the biggest earner of all and maybe the biggest bargain of all. Let's just take a look at SunPower, and you get an idea of how the cycle patterns in this one, that's SPWR is SunPower, have really been outstanding. Now I've got this a little different because I want you to see the phasing in here, and I've got those colored so that you can see them. And the green phases are rising phases in the cycle, the yellow phases are corrective, and the red phases are bearish phases in the cycle. So this, you can see the cyclical pattern was due to bottom right in here and then get you a rally. Look at how nicely that worked. 34-week moving average is often a support or resistance area. You can see in here support here, support in here, support here, here and here, resistance here, and now getting back up to it there. So this is a tough area for this stock. Even on a great earnings report, $28 approximately. It's trading at $26.88. You can see it got close to that and then started to pull off. So if we were looking at a longer term pattern, and here we're giving you a lot on this market week, it would look something like this. You can see that, and then the next cycle pattern turning up like this sometime out in January or so. So that's how we use our cycle analysis, and all of our subscribers to the askSlim charts get these charts every week from us, all updated. So that's a look at the solar category. A couple of other stocks that had good earnings. Aetna AET, that cycle was in good shape and moving up like that one. And Humana also is another one. These stocks, we were looking for declines back about a month ago. They declined perfectly into our bottoming area and then moved up. So on good earnings, Aetna up 10% for the week, Humana up about 9% for the week. Let's take a quick peek at that Aetna chart, AET, and you will see this bottoming that we were looking for. And as that comes in those two little blue spikes that you see on the bottom, those are timing spikes. That's when we expected the low to come, and you can see now this reversal as it hits the support right at that point and then starts to bounce in there. So I don't tell you the truth, I don't love this stock, and I think that Hillary Clinton is going to be all over this group through this election period. And so, you know, I'm kind of looking for rally in here, but then I think it's going to roll over again, and that group going to be in trouble. And so I am not liking the HMO groups for next year. Right now they're in a bouncing period. Let's take a look at Yahoo, YHOO, and this stock gets a bounce also in a period that we expected. You can see the bottoming and the cyclical patterns. I can trace those out for you to see how the cycles work. So let's look from this bottom right in here. You can see where that cycle low was due, and you see 1, 2, 3. I'll put those in here for you. 1 and 2, and a horrible rally in here that only got it back up to that level, and then 3 all the way down through the cycle timing there, and then rallies up. It's getting to the resistance area or close to it, up around 36.70 we'll call it. It's trading at 35.40, close to that. So this is an area we would expect it then to have some trouble and then start to roll over again. So a little more room potentially there in Yahoo, but then moving down again. One other stock to mention is that Win, up about 7% on the month. That those stocks, Win, LVS, have been under pressure. Las Vegas Sands up to a resistance area. Now Win, pattern that didn't move up quite as much. Actually, my target in there is 77, so I'm a buyer of pullbacks in Win. So for the stocks that were the worst of the week, let's take a look at a bunch of these. The first one we have to start with is CNX. This is a console coal company, Consol Energy, and talk about, coal. Since President Obama has become President Obama, this whole industry is just being annihilated. Stock comes down from 2 years ago, a high of 48, all the way down to the low this week of just close to $6. Look at the decimation in here. So for those people that get our cycle charts, you could see this cycle right there. It's very clear. This cycle right in here, very clear. This horrible rally, and then this small cycle here says any rally in here is likely to come down again all the way through January of next year. These are bad patterns. Consol Energy down 35% on the week, and we've had this one as negative the whole time. As a matter of fact, if you look over here on the daily chart, you will see that our slim ribbon continues to give negative signals in here. Every time you see the down area, here is a new area of negative momentum, and that has continued to work. This one was this one way up here, and look what it got you here. So great momentum signals on the slim ribbon, and this one is remaining quite negative. Bad one there. Coal, well, we'll say coal is just poison, right? Well, that's how certainly it's acted. Solar City, as I mentioned, a contrary trader to these other stocks in the solar industry. We have been quite negative on Solar City versus the other ones, and the reason is, well, they lose a ton of money, and they were bought essentially continually by investors because of their relationship to Elon Musk and Tesla and the coming Gigafactory. And we'll see in SCTY how it really matters if a company makes money or not. If I can get this chart up for you, SCTY, yep, got that one now. And take a look at this weekly chart, and it has been extraordinarily negative. We have believed that it was coming down for another trip to the downside, and you can see in here these negative patterns. I can just trace the cycles out for you, and you will see this one in here, almost a perfect idealized cycle, we call that. This one in here, very nice timing. This one in here, well, that one ended higher than it started. That would have meant we were going to get above that high or test it, but it failed and broke down, saying that all this time would be declining. And look at that, this big declining period right there, and a low due, well, sometime late November. So this big downside gap in Solar City. Solar City down on the week 26%, and that's contrary to what we're seeing in the rest of the group. You can see the estimated losses in this company, and how do you buy a company when those have been the estimated losses going forward? Just absolutely enormous. Not liking that at all, and I haven't. And you can see in here on the daily chart this huge downside gap on massive volume in there, and biggest volume of the year. And we had negative momentum come in back into place way up over here at $45, and now it's trading at $28. So bad pattern in there in Solar City. That certainly belongs in the category of worst of the week. Comes some other negative stocks in there that reported earnings. GoPro down 15%. Their growth was 43%. How do you like that? Well, that's still disappointed. They were down 16% on Wednesday on their earnings report, and even with that good growth, it was still a miss. Akamai, AKAM, this one had a crash. I mean, it was down 19% on Wednesday, and I got to tell you, there were no signs on the charts in that one at all. There was nothing at all that gave me a sense that that kind of big disappointment was coming. Down 15% on the week for AKAM Akamai. Let's take a look at Navistar NAV. This has been a stock down 12% on the week, and these cyclical patterns have been very negative. For those of you who don't know, I'm a cycle analyst, and I look for these repeating patterns in the markets, and then work up correlations and work up different ways to get a sense for direction of, well, close to 400 stocks, futures, and ETFs. Take a look at this Navistar pattern, and you can see a pattern that is quite negative. We were looking for a rally to come in this period right in here. See those two cycles pushing up? It fails under this level. That's when this points to the downside, and you can see every rally in there fails in Navistar. So that is quite a bad one. And let's take a look at Marvell, MRVL, as their CFO resigns. They have had accounting issues, and you can see in here more beautiful cycle patterns as this cycle right in here, see that rally, breaks down underneath this level, points to a continued decline. That is those dotted lines right there. Gives you a little bear flag right in here, you see that? And then down again. Low due in here in a couple weeks for an attempted bounce, but this one certainly is a tough one in there. Also, for the week, gold and silver stocks, they moved to the downside as we've seen this gold moves just fail at midweek, and pretty strong as those stocks have turned quite weak. Gold stocks, silver stocks, we've seen some big down moves, especially in Goldcorp GG. So that group, and actually, if for those that are members, you can go in and see my long-term big picture gold analysis. I'll do an update on that pretty soon. Of course, that's for members. We have 7 different categories of videos. Epiphany will tell you about that in a little bit. All right, so for our calendar for the week, this is one of the favorites. People write us all the time. They say they love our earnings and economic calendar. You can see it is right here, and you have a big event coming on Friday. All the rest of those, well, you could get some market movers in here on the PMI and ISM on Monday, and the next big mover after that would possibly be the ADP, if that's way off. But then this is the big one right over here, the employment situation on Friday. You can see earnings reports. On the top level is the pre-opening, and then the middle level right there are earnings after the close. Some big ones on Monday, as you get Visa. That's always a big one. On Tuesday, well, that's one everybody will be watching, including me, and that is Tesla, as I almost always have positions in there. Wednesday, after the close, is Facebook, in case you're looking at those, and some other good ones in there. Whole Foods, Qualcomm. On Thursday, well, no big mover in there that really affects the markets that I can see. And then on Friday morning, we get those stocks that are in that HMO category, in Cigna and Humana. So that is the earnings calendar for the week. So that is our opening segment, and I hope there was lots of information in there that was valuable to you. Always want to get your emails, slim@askSlim.com, and go to our website, if you don't go there, to askSlim.com. That's it for the opening segment, and we're going to be back, and we're going to look at, well, some things that you're saying and asking about. We'll be right back. All right, in the emails and tweets, we have a nice selection this week. Had some questions on strategy, some questions on different markets, lots of questions on analysis on some symbols. Picked out 4 different stocks to look at, and here are some good questions. Going to get right to it. ML writes to me, he says, a couple of quick questions. What factors drive gold miners? GDX is the gold miner index. Are there factors other than price of gold that impact it? Actually, the answer to that is yes. While the GDX, GDXJ, by the way, is the junior miners, is mostly affected by the movement in the price of gold, there are times when other things do affect it, and certainly affect the stocks that are within those indexes. For example, just this week, we had a day when gold fell very hard, and Newmont Mining reported earnings. So big drop in gold, most of the miners went to the downside, but Newmont had an up day, actually, because of a good earnings reports. Also, another way that the miners get affected by the stock market is, well, it's kind of that, the tide lifting all boats scenario. When there's not particularly a big move in gold, let's say it's down a few bucks, but then there's a big move in the stock market to the upside, well, a lot of buying tends to come into stocks, and you could get a better performance in the miners or individual gold stocks, even though gold didn't do much or maybe even slipped a little that day. So yeah, it's really dependent on the individual situation, but I would say correlation is better than 80% most of the time on the GDX versus the gold index. The next part of the question from ML is that just the weekly chart in silver has a downward bias. It says the daily charts were indicating an upward bias. He says, is that telling me that the overall bias is down, even though chances are good that there will be a short-term uptick? Well, you explained that beautifully. Actually, I look at things in windows of time or layers of time. And what happens is that the shorter the time period, the less dominance there is on the overall pattern. So the longer the time period, the more dominance. What you're talking about is silver being in a longer term downtrend and at the same time being set up for a potential rally. What happens when you get that is the rallies don't last long. Actually, I'm going to put up the silver chart right now and let you see what that looks like, and pretty phenomenal in what has happened just this week. Here's the silver chart. On the left side is let me get this lined up just a little better so that you can see. There it comes. Okay. There we go. Silver. Okay, sits in there. Now, if you look on the left side, we have the weekly chart, and you'll see on the right side we have the daily chart. So in this particular case, what we had was, well, silver was in an uptrend. You can see that. And that was the dominant force in silver. Now, if you look on the right side, what we had was silver following on the way up. But silver got up right up to the top of that resistance. You could see that on the weekly. Here it is on the daily also. And now I'm just going to blow up the daily so that you can see this chart all by itself. And maximize sell. There you go. So what happened was silver had a big pop, and it got way up there. You see that long tail, that wick, up to the top of that resistance. And then you see this cycle pattern right here. It then broke below that low and turned this down. We were looking for that kind of a trade. So silver, yes, you see the big uptrend that it's in right in here. And you can see that, and now you can see the downtrend that is established, and so you have a small downtrend within a big uptrend. What we look for, well, getting down to this support zone or this 89-day moving average within that particular uptrend. So you talked about silver being in a downward bias. I just showed you the longer term being in an upward bias, but truth is that what I just showed you is just the short and intermediate term. When you look at the long term, now I'm popping out way out further in here, and you can see here that what you were talking about was that this uptrend right in here actually lives in this downtrend right in here. So it's all about time frames, and you could see in this big downtrend you had 1, 2, 3 nice size rallies, and now rolling over, I think, to one more decline towards the year end. So that was a great question and a good way for us to look at how different time frames are really important in the analysis. Great question. Next question is from PC and asks me about scaling into winners. He says, your strategy of scaling into winners when a momentum moves in a desired direction is fantastic. He says, I've had great success with that method. There are so many different ways to scale with options and option spreads and stock, etc. So what PC is talking about is I recently have done some videos on short-term chart grids for scalpers, and the same thing for swing traders, sets of 3 chart grids that help you. And the real key is to have the right setups on your charts to find the momentum, catch the big impulses when they're happening, and then to even add on to the positions and maximize winners. So that's what he's talking about. He says, what is your preferred ways to manage these breakout trades? Do you scale in steps? Do you take some profits along the way? Do you add at some point intervals? Actually, I do all of that, but it really is dependent on the situation. And I'm really glad to hear that you are executing well in that style. I always talk about that the key is about catching the big impulses, not to be against them, not always fading the markets for the little wiggles back and forth, because that's not a good way to trade in the markets, and you're going to get just chopped up, and you're going to end up with just small winners and bigger losers. So the key is to get set up for those bigger moves, and I'm glad to hear that you are discovering how to do that. The point about that is that I made to you, is it worth the price of the subscription that you actually got those setups? And I know that it's well paid for itself. What I do is when I see that there's a setup and I think it's going my way, I add actually really quickly to it. So I'll enter a trade with like a quarter or a third of a position, and then I'll get it much bigger when I know it's going my way because I want to maximize the trade. I usually don't do that more than once. If I'm in a short-term trade that's really for a few hours or a day, and then as it's going my way, I will come out of the trade slowly and scale out. So if I do that and scale out and all of a sudden it has a pullback, let's say it's a long side trade and gives me another entry, I'll just enter again and then catch the next impulse on the upside. And I make that sound like it's so easy, right? Well, it's not, of course. And it takes a lot of thought and concentration and understanding the charts and the particular security that you're trading. But that's what I think is really the best way to get a longer term success, is to set up to catch those momentum trades. So great question. TC writes to me, he says, I had a great week in the markets. Boy, I've had a lot of people writing they've had a good week. A lot of traders like to fade these moves in here, and I'm even guilty of that a lot of times, but I've had some people write me that have caught some big moves. It says, made some money on Boeing, scalped a little Skechers, made a small purchase and looking for a short-term bounce in Whirlpool. What are your thoughts about Whirlpool and Boeing? And thanks for all you do. Well, thanks. And let's put up those two charts, Boeing and Whirlpool, and we'll do some analysis on them and see where we are. So on the Boeing chart, what I mentioned is that it had been in a rising phase, but then that had been after there had been a pattern set up that was negative on the longer term. And I want to look at Boeing and see how that pattern sets up and what's negative on the longer term. So here is the Boeing pattern. Now the pattern in here is, as are many charts right now, skewed because of the flash crash. The depth of this decline in many cases just lasted for minutes and was kind of unreal. So a lot of things we have to take the secondary low for the cyclical lows. In this case, you can see the rally and the sell-off right here made this cycle right in here. And it takes some adjusting, some experience the way you look at them, and fudging a bit to get to that, and some hindsight also. So all of that is part of this art form that I'm in of being a technical analyst and certainly a cycle analyst. So here is the Boeing resistance right up over here. Now this previous cycle high peak was right there. So normally when you have that kind of a bearish cycle, the next cycle does not get up to the old high, and what you tend to do is get up to some resistance area and fail. So we've had this rally right in here and gotten through these resistances right there, and now we're getting a up to that resistance number there. So it looks to me like Boeing is getting up to a point where there is some resistance. We'll call it 148 to 152 based on what we're looking at there. We're going to switch over to the daily chart in here, and here's what we're going to see as we look here. So let's get the top of that resistance zone visible. Here is the pattern in here, and this is the top of the weekly resistance. This is the bottom of it. You can see we've gotten right into that zone here. We had a bearish harami, actually two of them in there, in 2 inside days, as it's showing some stalling. So we're actually expecting it to pull back and get down to this first support over here. That's 139 in Boeing, and you could see the 89-day moving average coming across right in there also. You could see here it resisted it. Here it got through it by a little bit and then pulled back again. Here it had lots of problems in the 89 days. So usually you get back down to the 89-day. It's kind of a mean reversion thing. And so we're going to look for Boeing to have a pullback of about, we'll call it $8 down to that support level there. So yep, coming up to that big resistance, and that should be a problem for it. Whirlpool chart, well, you want to see that one. That one is an interesting one. Let's go back to the weekly charts. We're still on Boeing here, and we're going to go to WHR for Whirlpool. And here is that Whirlpool chart. Now, this has been in a downtrend. I mean, is that ever clear? Doesn't take a great chart reader to see that. Up at 217 high, falls all the way down to 140. And, this might be reflective of retail, and retail has just been doing terrible. So this might be in line with that. Big cycle patterns you could see in here, and the two smaller ones that formed right there, well, a little bit tough to read in here, but here's the smaller one right here. Here's the first one right in here, and then this one right in here, and maybe bottoming pretty soon. It's getting a rally, a sharp rally up into the top of that declining channel that's in there. That low seems a little early to me. It could be that is the low, but I have some doubts about it. And with this big downtrend it's in, that actually doesn't really end until, well, let's click on this cycle bracket and it'll tell us out in March of next year, which is actually an alignment where I think the stock market is going to fall into that time period. That's, I would say, a sale as it tries to pick up its head really at any point. Here is the short-term pattern in here. Look at that earnings day. Man, that is incredible. Talk about 89-day moving average having value. It got up to it over here, see, and it just absolutely collapsed. A perfect touch of the 89-day moving average right there on the earnings report. Look at that day. It trades at over 168 and then comes all the way down to 140. I mean, 20-point range in there, nutty. And then gets all the way back up in these last 5 days. You could see all the buying coming in intraday by this right there. That's accumulation distribution and making a new high. So that to me says that buyers are coming back in there, and maybe we do have that intermediate low with this massive amount of volume that came in on that day. You could see all that volume. Let me bring that up a little bit. And so that says to me that maybe you have a short-term bottom. My bias in there right now is that in the longer term, it's still in the downtrend that we're looking at that's going to last for a long period of time. This downtrend looking like that. But now I would say maybe the next pullback in here would be the best trade and a little bit of a long side trade there for another pop up in there. I'm not really going to short very much over here because of this accumulation distribution. That shows you a lot of buying coming in, and that does worry me for the short side. So I'd rather wait, let it come back down in here, test the slim ribbon on the 13-day moving average, and then look at the upside in there. So thanks for that. That's from TC, asked about Boeing and Whirlpool. Next question was from MRV, writes me some great emails. He says, I'd like to know your opinion on Netflix and Celgene for this week, and he says, always appreciate your support. These are people that are level 4 or level 3 subscribers. Then they have the right to get my charts in level 4, and on level 3 and 4 can write me the emails and ask me to share my analysis with them on each of these questions that they have. And I got tons of them during the week, and I just pick out a few to share with you and show you. So this one, actually, I love this Netflix chart because this to me is setting up very, very nicely for a trade, and I'm probably going to be on this one tomorrow. So let's take a look here at Netflix, NFLX, and take a look at the weekly chart first is what we're going to look at. And what happened in Netflix is it got up to some resistance. They came out and said, well, they were going to raise their prices $1 a subscriber for new subscribers, but then all of a sudden the stock took a pretty good size hit. So here is that Netflix chart, and you can see in here that it got up close to that resistance number right in there. There were some minor extensions that were right in here that we had. So it kind of got right up to a resistance zone, had this big engulfing pattern right in here. We were looking at this right here as the time period for another break, and you could see it came right in there. This is, again, that flash crash week that skewed everything. So it's weird to see a lower low in the middle than over here. But that's what we have, and that's the way these things shaped up because of that weird 1,200 point opening in the Dow that day. That remember, down 1,200 and then all the way back to only down 150 and then down 700. I'd like to see a few more of those days. So here is Netflix now, pretty soon going to move into a rising period, but I have a feeling that this decline is not over with yet. I'm going to show you why. Let's take a look here on this daily chart, and we'll take a look here. Let's move a little closer that you can see. So what had happened in here was that Netflix had this earnings report. You can see the dates right there and the big downside gap, nice high volume. And it was in this upward channel, which is essentially a bear flag. This is the flag pole, and that's the upside bear flag, and then it broke down. Came down, here's the support right over here, and just was a perfect touch in there. Now rallies up. Now look what it's catching. The underside of that channel and the 89-day moving average puts in this harami right there, which is a Japanese for a body inside of a body. Yes, that's baby. Body inside of a body, and that big rejection, and now looking to me like it's going to test support again. So I'm thinking one more shot to the downside in here, and we could see this stock down around 96 or 98 again from 105, maybe in some quick fashion. So that one looks like a test of those lows at some point coming. The other one that MKV asked me about was Celgene, CELG. So let's put Celgene up. Let's move over to the weekly chart to start. And we can see in here that there was a declining phase that was coming right down in here. Now this blue is the IBB. So we're overlaying the IBB or the biotech index over the Celgene chart, so it helps me have some guidance in there also. So in here we were in this declining phase. That's this one right in here, again that flash crash, and the bottom came and then got the rally. You see that right here. Now this shape right in here, it closed lower than it started. That's bearish for the longer term. So what it means is you get a rally into resistance zone and it fails likely, and that's where it is, right up there in the resistance zone. I think that is a tough spot for it, and when you look at the cycle patterns that are in here, this one in here is the IBB pattern pushing down, and I have a feeling that's going to bring some group pressure to Celgene. And likely to get some pullback in here. So looking in here, you could see that the 34-week moving average, which is pretty key for it. In fact, here was a touch of it right here. Here it got a little bit under it there, and so we're going to look for it to get back under there, let's say somewhere around the 118, 119 area from the 125 area it's trading at right now, based on what we're looking at in the weekly. When we look at the daily chart in Celgene, you will see here that, well, there's the daily chart. Remember that our subscribers are all getting these charts if they subscribe to our level 4, and they see on all of our focus list stocks where these important support and resistances are, and there you could see a bearish engulfing pattern in the resistance that is suggestive of a top and suggestive of a potential decline. Look what happened in here, a bearish dark cloud cover. It took a few days. It came, just tickled out that level, and then had a big decline. Here is a bearish engulfing. It took some days and then had a big decline. So here's your engulfing. Maybe it plays around a few days, but then I think it gets back down over here to that support around the under 115 number from near about 125 it's trading at right now. So a little deeper support there than we see on the weekly moving averages. But you can see Celgene also looks like a stock that is going to pull back, and overall that longer pattern in there is a negative pattern because of that cyclical breakdown. Up to resistance right now, this is the place where I like to initiate short positions, and I would guess that we're going to have a pullback up. Now, stuff doesn't always work, right? We're looking at probabilities, and in Celgene the probability is it's in an area that it's going to start to have a rough time on the upside. You know, for people that are strategic option traders, having that information and being able to pick these resistance zones, it gives you, in my opinion, an edge because then you don't get in too much trouble early on, and then you can wait for the charts to tell you that, okay, now is the time to start looking above the top of that resistance zone for the place to be initiating your option shorts or option credit spreads, those type of things. So I think that's a good look at how that works. Next question in here, or the last question for the day, from MB says, hi Slim, do you use after hours trading for scalping and swing trade setups? I know there typically isn't much trading overnight on equities, but what about when scalping futures? Right, well, you can barely trade any equities because only in the European markets, and they can't do that here. Do you use the overnight support and resistance areas? And should I focus not too much on overnight price action? I do not use 24-hour charts. First of all, I don't like anymore getting up in the middle of the night to trade. I'm well past that part of my career. For people that do like to do that, and I think currency traders that, I think some of the best currency trade comes when the European markets open. So, that 2 a.m. to 4 a.m. time, my time, Central Time, tends to be some good trading in the currency market. So I think people that do trade those markets, they should use 24-hour charts, and they should use tick charts, not use the bar charts that I always use. Every underlying has got its own best number of ticks to put in each of the charts that you use. Let's say you're using 5-minute and 20-minute charts. Well, on the number of ticks in those charts is going to be different for E-mini S&Ps than it's going to be for the euro currency. So you've got to use some trial and error and figure out what the best tick values for those charts are for you, for your own personal use. It takes a little trial and error, and then you can figure it out. And yeah, I think that if you're going to trade overnight in those markets, that using tick charts versus using the day trading charts, those tick charts in 24-hour charts versus day trading charts are the way to go. As far as support and resistance goes, I like to use the support and resistances off the daily charts versus those shorter term charts. But if you're just scalping off 5-minute charts, then you're going to do the support and resistance off of those charts on the 24-hour charts. And a PS there, and that is, I found found huge value in your emotional capital psychology video. So I did one in the member section in Trader Psychology called Managing Your Emotional Capital. He says, I recently got caught in the E-mini and NASDAQ markets in positions that were too large for my account. The anxiety was nearly unbearable, and this past weekend I closed out about half the position and before the weekend, and also sold some puts against my short positions on Monday. He says the video really helped me identify what was going on inside of myself. That is the purpose of my Trader Psychology videos. It's really about understanding ourselves, and also about getting a good handle on how parts of us that we don't sometimes really know about inside are driving our decision making, sometimes in unhealthy ways. So I am glad you liked that video. There's lots of great videos in that section. So if you're not a member, sign up right now. And by the way, Monday will be our last day for our special of this week and this coming week. So you can get a free month still if you sign up for 3. So now is the time to do that. That's going to end this email segment, and we're going to be back shortly. And of course, one of our favorites is the short-term view of the coming week, and that's coming right up.
Hi, I'm Epiphany, the askSlim spokesperson. Thanks for watching our weekly show, the askSlim Market Week. Grow your analytical skills, strategies, and confidence when you watch videos from these 6 categories in our member area. Futures Speak, in-depth analysis of 24 commodities and index features. Tools for Techs, featuring how-tos on many charting tools, often highlighting current trading and investment opportunities. Trader Psychology, in which Slim brings a holistic approach to trading, looking at many personal issues that can be obstacles to success. stock sectors, a look at stock groups and ETFs that may offer present opportunities. IRA MO. With ideas for longer-term approaches to your self-directed retirement accounts. Big picture analysis, a broader view of the major markets with perspectives on important tops or bottoms or ongoing longer-term momentum. So don't miss these great videos. Raise your probability of success by becoming a Level 2 member at www.askSlim.com/membership.
Thanks, Epiphany, for explaining those video categories. Actually, we've added one more video category, which is style, strategy, and plan. It's about, well, how we engage in the markets and about raising our probability of success. A lot of different topics that we can talk about in there. So I want to mention November 2nd, just in a couple days, our special ends. We've been offering a free month to start if you sign up for 3. So make sure that you sign up by the end of the day on Monday, because on Tuesday that special is gone. So don't miss it. Great opportunity to learn a lot as our video library has been growing, and we look at some great things, especially a lot of analysis during the week as we do our Future Speak and stock sector segments. So all of that really great stuff. So now for the short-term view of the week, which we do every single week. This week, and I can't tell you, there's been a lot of highlights in there for me. The best one probably is the oil market for us, which has been trading nicely in alignment with the patterns. The stock market just refuses to correct at all, as every downtick seems to be met with an uptick. Gold market, well, very much in line with our intermediate call of weakness coming through the end of the year, but the short-term gold pattern that much different than we had looked at, as it turned so much weaker after the FOMC announcement. And overall, we'd say we probably struggled some this week, as we're going to give ourselves a 40% for the week. We like to be in the 60-70% category. Last week we were closer to 80%. So this week, a down week for us. We'll start out by looking at the crude oil chart. Now we're going to look only at daily charts in here, as we always do that as we look at the short-term view. I'm always considering the longer-term patterns in there when I do this. So we start out with light crude. Light crude is in what I think might be for the intermediate pattern in a corrective or declining period, and you can see that in here as this blue cycle is kind of turning down right there, and this high right over here so far is just under that resistance area and well below that high right there. So those are the kind of the important areas we're looking at. So this is short-term resistance, and my shorting zone for me, and I have the word short in there just as a reminder. So in this area of the 46s, $47, that's kind of my shorting area, because I actually expect it to have a down week. So what we said last week for light crude was that it would be lower early, try a move up to maybe 44, and then try and move below 44, which it did, and then get a bounce up. This is kind of the pattern that we had drawn on our charts on my notes like this, and that's pretty much what we got. Now we're in this area where I believe it's going to fail. We're going to call this a down week coming up here. You could see my target, that target right in there. I put that in there when I did a video this week about swing trading setups, and I used light crude as an example. So I think high probability that this moves down fairly soon, and we'll call it the next something like 5 to 7 days now, with a potential move down below into that support zone under 43 and a quarter, maybe down as low as about 42.50. So I think this is a very risky week coming up for light crude. Let's take a look at the gold market. Nope, and that is /GC, and you will see there. Let me get this back in line so you could see it clearly. I don't know why that thing slipped. And there we go. So you could see in here we have the bigger cycles in here, and that's these right there, and then this rally cycle right there, and getting into this corrective phase there. That's what I had expected to be happening, and for weakness to start coming into the market. Now, what I said last week was that we'd see gold up to about 1185 to 1198, and then the risks really mount for a couple of weeks. Now, I only give myself half credit for this because I actually thought it would be an up week, that it would actually hold the gains. I said 1185 to 1198. It gets up to 1193. I have 1183, so I just missed that resistance by a couple of bucks. And then this is the FOMC, and you could see it just turned over in here. So this pattern in here looks like this to me. That is a bad pattern. We're going to say the bias continues on gold to the downside and rallies continue to fail. So sure, you could get some upticks in here when you have this kind of a pattern, but I would expect if it did that it would start to come down again. And we're going to have a target in here for the near term of this 1133 number right there. It could fall all the way down to this level here, but you see this moving average coming right across over here. That is the 89-day. We would expect it to get maybe just below that, so that is why we're picking that zone. So we don't really think it's going to be a big, even though this is a negative pattern, and we don't really think it's going to be some giant slam in there. I just think it's going to get down into this support zone just below that 1133 number. Now, if it happened to get a rally going early on in the week, this is our resistance and sell zone there, above the 1155 number, right around there. And if it crept up there or popped up there sometime during the week, you could see the slim ribbon, the 13-day coming down there also. That's my sell, and then I would look for it to come back down over here based on these patterns. So that's really what we're looking for, is to test that support 1133, and if any craziness happened, that's about 1117 down there, but that's some extreme level in there. So the next thing we're going to look at is the Euro market /6E, greatly affected this week by the FOMC. Our pattern in here is now drawn differently than it was before, in that we believe that this sell-off in here extended this cycle pattern right there. We'll know more about that in the next couple days. You could see this is really what we're expecting like this, so I don't think a rally gets it very far anyway. The question is it more like this? But it's still the same thing. It doesn't really matter if it's this high or a high in a couple days. We're still looking for this to not get very far and roll over. We're going to look for a test of this, at best, this number at about 111.30. And then begin to roll over again. So my note on my graph here that I write on my notes looks essentially like this. That's the pattern I have written, and that means I'm going to be looking for selling on rallies in there. The next one is the bond market. This one we were clearly wrong on in the week. The pattern that we're looking for in here, you can see now, has changed. Now, when this Fed changed their mind, we had actually been looking for a little bit further rally in here like that, and then expecting it to roll over in this pattern right in here. But look what it did. It broke under this low. That sets up a bad pattern. You see the head and shoulders that looks in here. It's not quite one because you have this big tail, but the bodies are head and shoulders. And so that's a bad looking pattern in there when we see it. And we expect that the bias will be continued to the downside. And we're going to look for a narrow week in here. Because we're expecting, and I'll show you that in a minute, some minor decline in the stock market early in the week, maybe the pattern looks like this, a little attempted rally and then down again in here. We're going to expect a test of this support area sometime later in the week between 1127 and 127 and 120. That's 127.09 and 127 even. Sorry about that. There you can see the 89-day moving average coming up, so that's going to give it some support also. So we're going to call it just a choppy down week, some attempted rallies in here, and then getting back down into this area over here. So the stock market has been, well, just immensely strong. We were looking this last week for a corrective move down to a level that seems so far away right now. It is incredible how strong it's been. We were looking for a move down in the S&P 500 to around 2034. Well, there's been no downtick. I mean, basically not at all. We had those two little down days that came on Monday and Tuesday while they were waiting for the Fed. And then, of course, on the Fed day, the big up day. So we had this kind of a week right in here. I was looking for this kind of a week where it came down more like this. And so nothing like that. I mean, I wasn't even close in here. And so wrong there also. Now, where are we right now? I would have not expected it to be able to get past this 78.6%, which it clearly did. And now it's moved up. That was the 11th day yesterday. So we have a 12-day high in here. 12-day highs only come in very, very strong markets. That's from this 11th day correction. When you get a 12-day high, you usually get like a 13, 14-day correction through that. So we'll call a couple down days early in the week. Right now, 2055 approximately is our downside corrective expectation based on this pattern, and then right back up again. The areas of resistance in here that we want to focus on are showing up right here when I pull this down, and this is this big fib confluence in here, 2107 to 2119. That's if we get this modest correction. Now, why am I only looking for a modest correction now? It's because they used up all the time. You move up this long, you just get something like this. I would guess that if we get that, the next rally test that area, and then we get to a potential failure after that. But I can't look for that now because of how much we moved up in here. We're just going to look for a brief decline, really brief correction, because that time is used up. Test 1155 area, and then get ready to have one more move to the upside after that. So you see that 89-day on the slim ribbon coming in there. I should just plainly just use my momentum indicators and not ever go against those, right? Because slim ribbon turned positive right over here, and that was with the S&P 500, right, just over the 2000 area, and now it's pushing up near the 2100 area. So who could argue with the value of that? The VIX. Well, the VIX looks to me like it's in line with what we just said about the stock market, where it's probably still going to have some period of better trading. As you can see right in here, this 11, 13 to 16 area looks like about the spot where the VIX is supposed to move up again. So we're kind of projecting that, well, we might get, this little correction in the stock market, but then you come out here for maybe about a week and a half after that of potential VIX weakness or stock market rally. So that's very much in alignment with what we were thinking now, as the stock market has just refused to have any kind of a downtick, and we're just looking for something to just briefly correct in here in stocks and then move up again. So much different than we expected, this big move in the stock market. And historically, we've seen this happen in the past. When we go back to look at the tops of 2000 and 2007, where you had the big downside move and the big rebound, our longer term indicators, well, still negative, but the stock market's going to have to turn down soon in order to then keep those from negating what looks like some weak internals that we're seeing still in the stock market. So that's it. A look at everything. I hope you have found great value in this whole show that we've brought you. Lots of stuff in there. Always, you can contact us at slim@askSlim.com. Don't forget, become a member, because that deal is ending soon, and I really enjoy bringing all of my knowledge and information to you. I hope you have a great week coming up. I will see you next week. And of course, I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna